So first, let's go to the continuation chart for a moment, okay? Do you guys remember, I sent this to the whole tribe starting September 10th, okay? I said to you guys, look, every other month on the E-mini S&P 500 continuous contract chart, we had corrections in the middle of the month. You see this? February 16th, March 18th. May was a little bit earlier than mid-month, but pretty close, right? June 15th, July 14th, 16th. Do you guys see that? And that how when we started going lower at the beginning of September, that had me on guard thinking, you know, this is not a really excellent place for the market to be weakening, because I'd rather it be weakening in the middle of the month. All right. So what came of that after I shared that with you on September 10th is we ended up in this sideways range, which then fell down starting on Friday. Now, if you happen to get the skinny on the mini report, some of my skinny members, you guys are here. Did you pay attention to this break lower? Did that have you more ready for today's weakness? Maybe not the severity of it, but at least the directional approach. It should have, because the whole time I said, look, there's this box, and until we trade one way or the other out of it, this market needs some time to kind of get its bearings. Okay. Now, with that, we came in and we wiped out this entire price spike. Now, this is the continuations chart chill. We're going to go do the contract chart, okay? And this price probe, excuse me, we are now coming back and testing the low. So part of why I wanted to hold this session today was to have you guys look at the broad market with the ES and see, yes, it was a weak day. Yes, there are fundamental news, world economic factors that could be feeding this weakness, but we broke below support and we aren't able to close it below it yet, okay? And we are well off the lows of the session. So let's take that to the contract chart. All right, so this is some of the analysis I did when I came in and wrote the skinny on the mini this morning. So again, we have now violated this support, but we haven't closed below it. This is extremely important no matter what you're trading. To see that the low was at 39.75 and we closed at 40.75. We actually closed a tiny bit above it. Also, we are pretty oversold compared to recent levels on the power zones, but there's still room to go lower, okay? So I got to see what happens in the overnight a bit to make more of this, but my initial observations are the following. Number one, we wiped out one price probe, entered the next, and we came exactly to my downside target for the day. Skinny traders, did you see that? I mean, I'm laying this out for you multiple times a week. Part of me having this session with you is like a pop quiz to see if you're actually reading your reports. So skinny members who are here in the room, please let me know if you caught that in today's report and it helped you be ready for weakness right into these levels. Excellent. Mark says I did see that. Stinley says yes. Harish says yes. Thank you. Okay, that way I know I'm not just like writing for my health. Great. Now, what does that mean? Does that mean that just because we came into this price probe from July 19th and rallied higher that we're done going down? Not necessarily. We have more we need to look at. All right. So I do see some of you giving your ticker requests. Before I do that, let me just get the 60-minute chart of the E-mini, which I'll, again, detail tomorrow in our next report, but let's just come and look at what it looks like here, okay? So I wrote this report at about, well, it took me a little while because overnight action was a little more severe. So I had to recalibrate a lot of support and resistance levels. But I said, look, if we go higher, if we can really get above this 43.67, fine, we might see more recovery. But actually, I don't think that's the level that I wrote. Hold on, I need to look at this. So I'm going to bring over the latest skinny and everybody will be able to see it. All right, so to do this, I'm coming into my Hima Reddy portal. Okay, whether you're here as a member of any of my courses or you're just in the tribe, you haven't dug into your education yet, You know what this portal looks like because everyone has access to the free tribe. Okay. Now, next to it is the skinny in the markets. This is where I put this report. I want to look back at the report and look exactly what I said. So current skinny in the mini reports, that's my ES report. And we send this out by email, but it also loads here. Okay, if they stabilize near the August 19th low, working off severely oversold conditions, on the 60-minute chart, a move above 43.67 would be needed to suggest further recovery. Here's the thing. It came above 43.67, but it barely stayed up there. Okay, you've got to see follow through in the moves. So if your trading time frame is lower than a 60-minute, you want to see bars starting to close above, okay? Here's what I saw when I was looking at the 3-minute. Now, I was doing some practice because this was a very volatile period. So I was not trading this live. Let me be clear. I was purposely standing back and letting the first few minutes unfold. Now, in that time, when it came down to this price probe, I was like, oh, I should buy there. I didn't though. So then later I put my own notes like, you know what, Hima, even I should have more confidence in my short-term counter trend trades because oftentimes they work. What I saw after that though, was how we came up to this 43.67 right here. And do you guys see how we couldn't get above it? This is very important. This was the tell for the day. Okay. We came up to the first resistance in the report. And then started to roll over. And then I saw this price spike develop. And we held that a couple times. This was a golden opportunity to go short for low risk because you could put your stop above the price spike. You had possibly even a triple 50, 60, no, this was not a triple bearish divergence, but you had a regular divergence on these two highs, even though it was in no man's land. But do you guys see this, especially my skinny traders, anybody who trades CS, whether you have the skinny or not, the lack of ability to get through this high was a massive sign for the day. Please type a Y if you understand that, whether you trade this market or not. These are the kinds of things I need you guys to be bringing your attention to. This is why we're having this session, so that the rest of this week, and who knows how long this crazy party keeps going, you can be on top of that. And then look at how many price probes developed along the way that you could have just kept selling with low risk. Awesome, Stinley, you took a short there, fantastic. Okay, great. So this was very important for us to set the foundation of what the broad market's doing, okay? Now I'll come back to some of the questions you guys are asking. We'll just go to our monthly group coaching panel. All right. Before I leave the ES, does anybody have questions on it? Let me know right now, please. I'll detail and get deeper in the skinny tomorrow, but the fact that we broke below the August 19th low and closed back above may be a sign that recovery is ahead. The fact that we came to the July 19th price probe, but didn't push down deep into it, may be a sign of a little bit of a rebound. Stanley's asking, what would you like to see for a reversal? I don't know what you mean by a reversal. Do you mean for shares for this contract to trade higher? Higher to where? So if you mean for it to turn higher, I gotta let an overnight happen. I'm not trying to push anything on here. So that's what I need to look at on how this price action settles out. The fact that we have this big giant candle and engulfing bullish candle is a good sign, but all that could mean is that the RSI power zones on the 60-minute chart want to get back up into this zone. Yeah, Jeff is asking, was the rally in the last half hour likely just short covering of day traders that were heavily short? I don't think it was only that, Jeff, because the market did come in and put in support at important big picture levels. I do think there's substantial buying there. The question is that enough buying to overtake all of this selling? So keep in mind, I have to let the overnight action unfold before I make calls about what will happen into Tuesday morning. But at the outset, if this low holds from yesterday, sorry, not yesterday, but Monday's session, okay? Then I would look at where's the 50% retracement of the move off of the high from the consolidation. And that is about 43.86, which, now this is going to look kind of messy because I have to draw over existing annotations. Do you guys see right here, guys? 50% of the current down move is also about 50% of this price spike. Frank says good traders are waiters. Yeah, well, it just depends on when you're trading too, right? I know some of you might be in the Australian session. That's why you're even awake now. And so you're like, oh, I want to stay up and keep trading. Well, I'm showing you then what I think is important to monitor. If this bullish bar unfolds with correct upside, great. But when it gets here, be careful because there's a lot of sellers that live here. Making sense, guys? Is this helping? I've never really done this way before, inviting everyone in. I don't know what you know. I don't know if you even know my name. I just know you're in my tribe and I've reached out to you. And so I wanted to give you a chance to come and see where the markets are after a very crazy day. Okay, so the ES covers most of what I have to say about the broad market. If you have questions about other broad market tickers like the Qs or the SPY or whatever, just ask me, okay? Great. Just process that for a second. Low July 19th, low August 19th. Today is September 20th, one day after the 19th. Yeah, it seems like we have a little bit of a 4-week monthly energy from the bulls coming in. Now, the question is, are the bulls going to be able to be like, I don't think so, and take this all the way back to this price spike? That's what I would need to see to even think that this weakness is temporary and was just, brief. But if the bulls can only take us back to these old consolidation lows back here, and the RSI power zone stays beneath the bull resistance power zone, then I think that that could be the beginning of an even uglier, longer move lower. That's weeks away, guys. I can't know that now. I have to look at the analysis and kind of see what unfolds. But I'm just giving you a look at what I'm looking for.